coming at you with a new cryptocurrency news update. In this video, this is the second video of the day. We are going over the Ethereum flash crash that went down on Sunday, 5/7 of May. The price of Ethereum went down as low as $47 by some estimates. Others are saying 27. It was hard to get a real bead on this. Let's check out this. Let's check out some of the charts. And as we can see from this chart here, let's see if we can go in a little bit closer. This chart here on Crypto Watch, the price, according to them, went down as low as $26, $27. And what happened? So people are wondering what. So you see the big red here, and then it went all the way up, back up to about $88. So people are wondering what the hell happened. So doing some research, it looks like found a thread on Reddit. There's a bunch of threads on Reddit, but this one seems to be that has the most information on it, by JESPOW, Jespow, a Kraken fan. The May 7th Kraken announcement, May 7th, DDoS and ETH/USD liquidations. So a link to this Reddit thread is in the description below. So he goes on to say, we have completed our investigation into the May 7th DDoS attack, denial of service attack, and the cascading margin liquidations on the ETH/USD order book. Despite the coincidental overlap in the timing of the events, we do not find any evidence of a coordinated attack or market manipulation. A large legitimate sell order triggered of ETH triggered a cascade of liquidations of people that were, so this guy was going short while there was a bunch of people going long, because it looked like it was going up, right? So people going long. The downward momentum of the liquidations was slowed by Kraken's market price protection system. The trading engine and risk systems functioned as expected. Once the liquidations has been triggered, they could not be stopped, DDoS or not. The ongoing DDoS attack at the time of the liquidations possibly inhibited the inflows of new capital, which may have been able to further absorb liquidations. Whether the market protection system took a pause. Price protection system took a pause. The DDoS also broadly reduced the availability of the service, which inhibited new orders from being placed on either side of the book. It is conceivable that had the DDoS not overlapped with the liquidations, that the bottom would have been lower. So, and then there's more information there. There's people demanding refunds because they couldn't guarantee 100% uptime. They couldn't get in. They couldn't change their orders. It doesn't look like that would have made a difference on them changing their longs. But they also, the argument is that on the side of the people that lost, is that they could have bought in when the price was so low. So there is somewhere else I don't know if it's in this thread, someone indicating that someone was bragging that they were about to short, and so some feel that it was coordinated. Whether it was or it wasn't, could have been someone seeing the liquidations and then the DDoS was by another party. But the point is margin trading. Margin trading. If you don't know what you're doing, don't do it. Margin trading is potentially a huge upside where you're given, like on Kraken and Bitfinex and BitMEX and Poloniex, where you're given leverage, where you're getting 3x, 5x, 10x of what you have on deposit. But the point is that if the trade goes against you, you can be wiped out and lose everything. I myself don't do any margin trading because I don't completely understand it. And I also realized a while ago that I suck as a trader. That's not something that I should be doing. I do a little bit of trading here and there, but the principles that I follow is that if I'm going to do any trading, I will not trade more. I will not trade with more than 5 to 10%. It's usually more than 5% of my total portfolio. And then when I put that 5% on an exchange, I will not put more than 2.5% into a trade. Lots of people lost lots of money. My heart goes out to them, but it is what it is. This technology is bleeding edge, non-regulated. So potential to make a huge upside, but also you can lose everything. So you got to use solid principles when trading. And again, you don't want to have more than you don't want to trade with more than 5 to 10% of your portfolio. Me personally, I like to stick to 5%. And whatever that 5%, you don't want to get in on one trade with all of that you're trading. So it is what it is, folks. So that is the update on that flash crash that happened yesterday. A lot of people made a lot of money. A lot of people lost a lot of money. Let's just do a quick refresh on CoinMarketCap just to see. Bitcoin is approaching those all-time highs. It's pretty high. Ethereum is on its way back up at 93. Litecoin's at 29 and Dash at 99, so it's down a little bit. I think it was up to 104 yesterday. So that is your cryptocurrency news update for today. Stay tuned for my next video. Please, if you enjoyed the video, please consider subscribing. Consider giving me a thumbs up. And stay tuned for the next video. Most of these are done via live stream. All right, everybody. Peace. And see you in the next one.